gravity, building out the ecosystem of space, which is potentially a multi-trillion-dollar market.
Mm-hmm.
So to give you some perspective on their revenue, it's all about the growth here, right? So last year they did about 135 million in revenue. This year upwards of 300 million. Next year they're expected to do about 750 to 800 million in revenue. By the time they privatize the underlying station, the private revenue streams that I just mentioned, and the public streams, which are the onboarding of 5 international space agencies, including US, Europe, Canada, Japan, and Russia, you're looking at upwards of 5 billion in annualized revenue. So this is a couple of years down the line. But if you take a 10 multiple, which in my opinion is a relatively conservative metric to value a technology company, we're looking at potentially a 30 to 50 billion dollar market cap inside just the next, say, 24 to 36 month time frame. So to give you some perspective, right now SpaceX is trading at 40 times revenue. Right?
Yeah.
Okay. You've got Virgin Galactic that made $600,000 in revenue just last quarter, that's trading at 100 times revenue. Okay, so we think that with Axiom having done 300 million this year at 10 multiple is rather conservative. So just to touch on the leadership here, Ken Gafarian is the chairman of the board. This guy runs a company by the name of IVX. Okay, that was one of NASA's largest contractors for the past 30 years. Okay, and then you've got Michael Saffredini, who's the CEO of the company. This gentleman was the director of the International Space Station for the longest tenure in NASA history, over 10 years between 2005 and 2015. So you've got major leadership at the helm at Axiom. Some of the largest investors include Fidelity Investments, okay, and Appaloosa Management. Maybe you're familiar with who David Tepper is, owner of the Carolina Panthers. Okay, the structure of the deal is as follows: it's a $3 to $3.5 billion valuation as to where we're going to have the shares, where we have the shares. Okay, they just rejected a $10 billion offer to go public through a SPAC. Okay, we're hearing a $15 to $20 billion valuation on an IPO inside basically the next, say, 12 to 15 months. Okay, and you keep in mind that we're going to be putting the shares directly into client accounts. All right. Well, with some of our previous deals like Palantir or DraftKings or SoFi, which clients made substantial returns, we as the Disruptive Ventures Fund, which is the limited partnership that owns the fund, that owns the shares, okay, we had to sell the shares and then distribute the cash. And we distributed 200, 300% on various deals. Okay? With Axiom, we're going to be putting the shares into client accounts. So, for example, they go public at a $15 to $20 billion valuation, which is 500 to 700% from where you will own the shares at $3 to $3.5 billion valuation. After a 6-month time frame, when the lockup expires, we're not going to distribute you cash. We're going to distribute you shares, and then you can hold those shares for the existing future. And in my opinion, what you're looking at is a company that is at the forefront of a absolute mega trend. This is going to be a $50 to $100 billion company inside the next, say, 24 to 48 month time frame. Keep in mind, it took SpaceX 10 years to go from a 5 to $100 billion valuation. Okay? So, just to give you some perspective, we did the convertible note, which was a $2.5 billion valuation at a $150 million valuation about 90 days ago. Okay? It was a $150 million raise. We did $400 million in indications of interest. Okay? So the institutional appetite is quite substantial here. It's a $250,000 minimum investment because the appetite by the institution is quite sanguine. I think we turn that $250,000 into anywhere between $1 to $1.5 million inside the next literally 12 to 24 months.
So, like, could I do 1031 exchange? Like me and my friend, we sell some property. Instead of buy property, could we buy stock?
You know, that's a question for your accountant. I think the answer is likely no.
Okay.
Only because of the tax structure.
I heard some people they do that. They actually like sell property and then they put it into. I guess we have to talk to our accountant first. I'm gonna talk to
Exactly.
Michael because my Michael is selling a hotel and so he was telling me he had money to invest. We're gonna fly to look at property, but I'll talk to him about this company that you're saying. You know, maybe we could talk to our accountant because our money is stuck in property.
I gotta tell you, I didn't interrupt you. I think this is likely one of the most compelling deals that has crossed my desk over the course of my entire career. And I know that's a very bold statement, but we've had a lot of success with a lot of different ideas. And it's my opinion that because this company has a dominating contract with NASA to ultimately replace the ISS, they will be in a position to take full advantage of the private and public sector in space.
Okay.
For years to come.
Okay.
So, you know, it's something that I strongly suggest you consider. If we can coordinate the 1031, I would love to, you know, help you with that. But, you know, this is something that it's quite interesting.
Yeah.
It might be worth
Because
the capital gains taxes, you know, if the 1031 isn't able to, you know, transfer over to the stock, it would probably be worth paying the taxes on those capital gains for the real estate.
I would agree.
I would really think about it because we're flying to look at some property where I want to do the racetrack and flying, and you know, yeah. So I'll think about it. Could you send me more information? Email? You have my email, right? So you could send me more information.
Of course, absolutely. Okay. Let me ask you this. Have you ever done a 1031 from real estate into securities?
No, I haven't done that. But I heard someone did. You know, some of my friends did. So they did from like even like security into real estate. I see friends that you know they sell their stock and then they bought real estate and they don't have to pay tax because they put in some kind of trust or something like that. You know, like they don't move the money. They have like this bank that did all the, you know, holding. As long as you don't hold onto the physical money, then it's okay. You know, you could even buy gold and stuff.
What kind of exposure do you have to the stock market presently?
Well, I have some stock, but in my IRA and stuff, because I
IRA.
Yeah.
Okay. Well, just to let you know, we can do these kind of programs in qualified accounts.
Oh, okay.
In retirement accounts. I don't know if that opens up the possibilities for you.
Yeah.
If you wouldn't mind me asking, how much do you have in your exposure to the market? Just a rough figure, $500,000, $5 million, $10 million, 10,000, just a rough figure.
Like around 8 million.
Okay. Well, this might be something you might consider putting into a retirement account because the reason why I suggest that because these are anywhere between say 12 to 36 month holds on average. For example, SoFi was 125% instead of about a 15-month time